Hey, everybody. Thanks for tuning in today. I appreciate it. My name is Max Convexity. This is the Daily Covered Caller, where I talk about option ETFs, option-based ETFs, and the option strategies that power those ETFs. All right, let's start with the heat map today. Or actually, let's see what we have on the agenda today. All right, we're going to look at the heat map as always and the defiance trades as always. Then we're going to look at the buffer report. I forgot to put it on there, but we're going to look at the buffer report as well. Then I want to talk about an email I received from Howard Chan from Curve last night. Then we'll take a look at a few viewer comments and look at the Tesla crash trade. We'll take a look at my new buffer report. I have a buffer report and then a different buffer report. I'm working two buffer reports now. We'll take a look at both of them. The second buffer report concentrates on these short volatility funds and these single day option based strategies like triple QI, QDTE, iSpy, XDTE, ones like that. All right, I have a special buffer report just for them since they're riskier, and they aren't really riskier, but they're perceived to be riskier. All right, so onto the heat map. All right, a lot of red today. Looks like there's a little bit of green in bond land. TLT's up. Bonds are pretty much up across the board. We got red in the semis, in the tech, red in commodities, red pretty much everywhere else. Emerging markets down today. China down today. Okay, so now let's go to the defiance trades. All right, so triple QI, these guys sold options. They received $168. Right now, unfortunately, that option's going to be a little bit of the money. I think the market's selling off. Maybe we should have looked at a chart first. Maybe I should start with charts on this show. But yeah, unfortunately, this damn thing's 175 points in the money. Luckily, they sold it for 168, but it still leaves a $72,000 loss right now. Let's check out the chart of INDX. Triple QI trades INDX options. So to check out triple QI, we have to check out INDX. That's where I put the profit boxes. Okay. So there you can see it. We opened in the profit zone and we just sold off. Sold off after the open. Right now we're down about 0.5%. So while we're here, let's also check out the two other major indexes, S&P and Russell. Now S&P doesn't look as bearish, and it just kind of went sideways from the open. It's somewhere in the profit box. So when we check the spreadsheet, we would expect a profit on JEPY since they trade SPX options. Now on IWMY, this one is sold off also. These guys trade Russell 2000 options. They opened in the money, or in the profit zone, but now they're out of the profit zone. All right, well, while we're here, let's check out USOY. All right, you can see these guys right here. Oil's been selling off since yesterday, but still they were so far. We had such a rally in the price of oil on Monday that even though it sold off on Tuesday and it's selling off right now, it's still at a full profit for this trade. Now the top line is max profit, which is right about where we're at, and we have to make it till the end of the day. So we shall see. We have it's earlier than I usually do my update. We have 6 hours or so to make it. So we'll see. All right. So now let's go back to the spreadsheet. So JEPY is actually going to be going to have a profit right now because we just looked at the charts and it was still, at least if I drew the profit box right, in theory they should have a profit. So let's do the calculation. Yes, they have $170,000 profit. They're going for $600,000. They're still making a partial profit. Look at this. They're up 11 cents a share right now. That's huge. I can't believe that. They were down at $1.38. That's incredible, isn't it? That is absolutely incredible. Triple QY is still down 5 cents a share, but heck, they were down at $1.35. IWMY is, they're still down 21 cents at this point. And they have they're going to be showing a little loss on the day so far also. Let's get the spreadsheet to calculate it for us. They're going for $1.5 million. Right now, they're realizing about $153,000 profit on it. But these guys, unfortunately, are still down 65 cents a share on the month. So this fund is in the most trouble of the three Defiance funds. Now, I've been on vacation this week, and I haven't been keeping up with the Yield Max profit boxes, and I apologize. But let's do this. Let's check out the buffer report, and we can at least look at some other funds. And we're going to talk about Tesla and crash. Let's look at the old, where's the new buffer report? Now, this is just the indexes, but this kind of gives you an idea how things are doing. So YBTC, I think yesterday it was the top performing. Now it's now it's the worst performing. Maxi and YBTC, generally one extreme or the other. All right, so just as far as everything else goes, it looks like the S&P, which is the first 6 funds on the left, or 7 funds, is down 14 100ths of a point. It's pretty early in the day. The market's only been open an hour and a half, but ZIVB and SVOL look really good as usual. And I would also have to say JEPI and JEPY look really good. Nice job. Okay, then of the NASDAQ funds, none of those high yield funds are up, but there are a few NASDAQ funds that are outperforming the benchmark. Or actually there isn't. Oh yeah, there is. Triple QY is outperforming its benchmark. It's the only NASDAQ fund outperforming the benchmark right at this point in the day. And IWMY also doing the same thing. Okay, so now let's look at the second buffer report. I made this buffer report more of a way to focus in on the most risky funds, or what are perceived as the most risky funds. I don't necessarily think that's even true, but so the blue one on the left is SPX, which is the benchmark. You can barely see it right there, but so you want to compare everything with the benchmark. Like on this third day right here, this was Monday. Okay, this was the day everything was down so much. The benchmark was down 3.09%. SVOL down 6.3%. ZIVB down 15%. THTA down 10%. But then you could see the next day the market snapped back and the S&P was up a point. And then you could see ZIVB, SVOL, and THTA all snap back really, really strong, which was nice to see. But then I'm also following iSpy, JEPY, and XDTE, which are they sell the same day options. And people always think these are so risky. And so I put these on here to show that these funds actually are not that risky, especially not compared to SVOL, THTA, and ZIVB. Okay, but anyway, then this is the average and this is as of yesterday. This is as of the close yesterday. This isn't updating today's number. But on the average, though, THTA was still down 5.74%. ZIVB was still down after those huge drops, 4%. But the rest of the funds are on the positive side now. And guess what the best performing of the rest of the funds is? JEPY. I mean, over this little 6-7 day period. But yeah, so maybe JPY is not as risky as everyone thinks. Remember when everyone was saying, yeah, I like Defiance, but I don't know what they're going to do if the market goes down. Well, we just saw they do better than a lot of the other funds do if the market goes down. But none of these funds do that well if the market goes down. These are all bullish funds. But all right, so let's see what else we have to look at. Oh yeah, Howard Chan. Okay, I don't have the email, but what he said, hey Max, he said, do you think you could tell your subscribers, your viewers, that we're boosting the dividend on 4 of our ETFs, which I thought was big news. Now he said he's boosting it for the rest of the year. Now Howard and them at Curve, they don't just pay out as much as they can afford to, like Defiance and everything does. Most other funds just pay out the full amount, except for JP Morgan and XYLD, or I'm sorry, and Global X. They also manage distributions. Well, Howard manages them too, but volatility's been going up. We've been seeing the distributions get higher at other companies. So maybe as volatility's been going up, Howard and his crew have put a pen to it, and they think they can raise the numbers for the rest of the year. He did want to emphasize that he said something specifically. He said, let me try to find the damn note. Oh, here it is. Yeah, he said, he said, I have some more news. For the remainder of 2024, we're planning to increase distributions on 4 of our single stocks. So AMZP, GOOP, MSFY, NFLP, while continuing to guard against NAV erosion. That's what, I was wondering if there is a way to let your audience know. So I told him, absolutely. I would love to let you guys know. He's going to put out a press release and with the exact amounts. And of course, they're also going to announce the exact amounts on Declaration Day, which is coming up here in 6 days, here in about a week. So that's exciting news. Curve's an exciting fund or an exciting fund family. And I'm especially excited about KQQQ. And I have a video that I have a script for that I haven't shot yet. That's an update on KQQQ. I'll try to shoot that today. I got behind when I went on vacation, but at least I'm still keeping up with the spreadsheets. Everything's still up to date. So sometimes I just don't have time to do a show. All right, so let's look at this $1 million baby trade. So this $1 million baby trade is a get out of jail free card for somebody like me that's a scaredy cat and thinks the market's not looking good for the rest of this year. Or I think the high is in. I think the high was made in July, the first part of July. Maybe I'm wrong. I mean, it's increasingly looking like I might be, but I don't know. I'm not bullish for the rest of the year. Plus, at the 6-month mark during the year, portfolios were up 20%. So if someone had $1 million portfolio, which a lot of people do, just a standard, probably your average retirement portfolio is probably $500,000 nowadays. But anyway, so you get $1 million, retirement portfolio, and you have a $200,000 paper gain for the year. So it's worth $1.2 million. You kind of like being a millionaire. You don't want to lose millionaire status was kind of the premise of the video or whatever. And I really think the fourth quarter is going to be rough. So this trade right here is called the New Year's baby. It's a hedge for December 31st. It lasts till December 31st. So basically, if the market drops between now and December 31st, it's a get out of jail free card. This option position is worth exactly how much your $1 million account would be down. So if the market drops, 25%, this option trade's worth $314,000. It offsets the loss you have in your account. So in any event, the good news is, or the bad news is, this thing was up like $57,000 last week when the market was selling off. Now it's only up 13,000 or whatever. But what I was going to say is the good news is if you didn't do one of these trades the first time, if you didn't see my video, I'm going to be doing a New Year's baby part 2, because now that the market has rallied and volatility's come down a little bit, it's not outrageously expensive to put one of these trades on for yourself. So anyway, be looking for that. Maybe I can maybe just do it right now. Anyway, I'll probably make a separate video about it. But I thought that might be interesting. We'll see how much it costs. Now, to insure the $1 million, it costs $35,000. But that was like a month ago. Now that a month's passed, it may not be as much. So I'm going to reprice it, and we'll give you guys a new position, a new position. But it's probably going to be something like, well, I'll just have to. Let me see if I can do it real quick here. All right. It's probably going to be something about like this. I'll do this. Let's see, 3 times. Do that 1 time. All right. So let's see what this would do for us. Okay. So this one looks like it cost about $30,000. So it's only about $4,000 cheaper. And the market would have to drop 5% before this trade would kick in. But if the market dropped more than 5%, so like if the market dropped 10% between now and the end of the year, this option position would be worth a profit, more than you spend on it, because it costs $32,000, but it would be worth $98,000 or whatever the difference is to make 78. I guess that'd be like $100,000 or something, whatever the math works out to be. But if the market dropped 20% from here, this trade would be worth $182,000. So I'm going to make one variation to it. I'm going to add a contract up here. We also have sold contracts. This is a spread, so it offsets some of the time decay. So now it costs $33,000. It didn't quite offset it enough. It didn't quite have enough insurance the first time. 20%, 30% needs to replace 300,000. I'm just going to call this close enough. At the higher levels, it replaces it. Okay. Well, anyway, I'm going to hit save trade. This is going to be New Year's Baby Part 2, and I'll put the link to it. And we'll keep an eye on this. But this is for somebody that missed out the first time. It's going to cost about the same, but let's see here. It's like $2,000 less. But all right, so we'll also keep following that. I'm not hoping, but if the market drops really big, or on days when the market drops, I like to look at these trades and see that they're working out, because they actually make a little bit extra money when the market drops, because volatility goes up and they profit off that as well. In any event, I like to follow these kinds of trades. I'm trying to make my channel specialize more in hedging type content. I'm just trying to find a niche. So speaking of hedging type content, let's look at the Tesla crash, Delta neutral trade. Okay, and this is updating with today's numbers on it. So right now, this trade's yield at 20%. Right now, the pairs trade, including dividends, is down 7%, 6.98. Today, it's up 1%. The red line is the return, including the dividend. So it's down 7%. I don't know what that little thing is at the end. I don't know why it's doing that. But the blue line, I might even take off of there. It's because it's just what the NAV is down. But that doesn't even mean anything. You wouldn't buy these funds for the NAV. If it was just if you didn't get the dividend, no one would own these funds. So to look at a chart of the NAV, which is without the dividend, is totally unfair. And everyone goes, well, this fund sucks. Look at this NAV. But you aren't really looking at the fund if you're just looking at the NAV, because the fund spits off an income that you have to factor in also. All right. So Tesla crash trade doing fine today, down 7%. I say here in a month, it'll be back to even. We'll see. Let's take a look at the Tesla crash chart. Like I say, I'm sorry I did not update the profit boxes this week. I bet it's about the same where they were last week. The market's going straight sideways. I bet they're making money on both sides. It's up a point today, so that's good. Tesla itself is down 3% from yesterday's close because it closed on the highs and it's down low. But over the past, 2 weeks, it's straight sideways. So that's why the Tesla crash trade is doing well, because it's just collecting all that old time decay. Let's go back here and see something here. So yeah, the crash side of it, the bearish side, is up 2.42% today. The bullish side, Tesla, is down 2.14%. But in any event, that trade's looking good today. And especially it's been around. Okay, when did it start? May 2nd. So May, June, July, August. Okay, it's been around 4 months. Okay, 20% in 4 months is still pretty good. I was saying it was 2 months. Yeah, that would be really good. 20% in 4 months. It just seemed like it just opened a couple months ago. I can't believe it's already been 4 months, or 3.5 where we sit right now. But 4 months here by the next dividend. Well, all right, guys. Well, let me think. If I can't think of anything else to talk about, $1 million baby trade. We talked about Howard. I think that's good. Let's take one look at the market and see if it's still selling off. I'm a little concerned about the market, or I'm not. Well, I am concerned about it, but not so much today. More so much between now and the end of the year. Wonder what this overlay is right there. Okay. Anyway, you can see the market turnaround is rallying, and we're right back up at the bottom line, which is minimum profit. So we'll see if we can turn this day into a winner. It's been a hell of a week. And there's one thing we could mention. Let's mention the dividends real quick. The dividend estimate. Triple QI. We're talking $1.30. Okay. The highest it's ever been that I remember was like 90 cents. I think it might have been 90 cents before I started keeping track of percent. But anyway, that's huge. That's like a 50% increase. All right. So on JEPY, it's $1.18. That it was saying too big of a number yesterday. Anyone who was watching it yesterday, it was saying an absurd number, like $1.40. And I said, let me have a chance to look at the math. I did look at the math, and $1.18 is still an absurd number, but I fixed what I think was wrong with it that was making it $1.40. So this looks pretty good right now. Now, I don't know if you guys saw my show last night, but I'll do the demonstration again right now before I leave this one. All right, IWY Russell, this is $1.36. Now, that would not be a record for them. They've paid $1.41 before. So this one is not as outrageously high as the other ones this month. The reason I'm pretty sure that these funds will pay about double, that I think these dividend estimates are pretty close. Because if you look at the dividend history from Roundhill, so Roundhill runs a fund that does the same thing that JPY does. It sells an option every day, monetizes that daily volatility. So it's in that daily cycle. These other funds that do monthly and weeklies, they don't get a bite of this apple. It's something that the daily funds get that the other ones don't get. What I was going to show you is I was trying to turn off my ad blocker. Well, I'll just tell you about it. The Roundhill dividends are double. I know we can't see it, but all right, right there. Look at that. They went 26, 21, 23, 20, 24, 35, 41. So from July 18th to August 8th, it doubled. And we're seeing that, and we'll see that same phenomenon in the Defiance, because these guys pay monthly dividends. We can get an early look by looking at Roundhill. In fact, I could even write a formula probably to use their. Maybe I'll do that. We might start estimating it by using their number and just extrapolate it. Anyway. You know me, I never met a metric I didn't like. I like to mess around with numbers, as you guys are aware. All right. Well, I hope you guys have a good day. I don't know if I'm going to have an afternoon show on, but I do have some other stuff to shoot while I'm here. While I'm here at my sister's place in Oklahoma. So there'll be some more stuff coming out soon. All right, guys. I appreciate each and every one of you. And I hope you have a wonderful day. And I'll talk to you soon.